if they were able to keep doing this forever, we'd see gold at $1,000 or under. We'd see silver at $8 or $10. It continues to ratchet higher, little by little by little, in a very frustrating and counterintuitive way, until one day we wake up and it's not. When you take a step back and look, things that would normally be expected to dramatically boost gold and silver prices, such as the massive demand in retail and industrial applications. You just got the Silver Institute, who just came out and estimated this week that the global silver demand would be over 1 billion ounces for 2021. And with what's coming out of the ground, it's somewhere just north of 800 million ounces. Here again, we're going to be in deficit. Or talking about the sudden threats of mines being shut down in both Mexico and Peru for environmental reasons. Or maybe it was the fact that the Indian imports are going crazy in silver. All of this has been brushed aside in what is a deliberate and intentional drive-by shooting of the gold and silver prices. And, here again, it gets old and repeating the same thing, but you can only fool the physical market for a limited time. People who say, well, can they do this forever? Look, if that were the case, gold would still be $1,000 or less, and silver would still be $8 or $10 or less. At some point, the physical demand overwhelms the ability to keep the price down. If you look at what happened, you had the commercial banks engineering a price decline almost in a feverish way, as if they are expecting something big coming, to push the price so dramatically down through all of the moving averages. Really what it did was it enticed a tremendous amount of managed money selling. Well, who's buying those contracts that are being sold by the managed money traders? And that is the commercial banks. So they engineer the price down. They get the ball rolling through the moving averages, which trigger the algorithms that the managed money traders have running their funds, and bang, everyone sells. That took the losses that the commercial banks have right now down $2 billion. They're still $8.6 billion in the red on both gold and silver. But the penetrating of the key moving averages in gold and silver is what allows the banks to buy back and cover, I guess you'd call it, ill-gotten shorts. And at this point, the total open interest by the commercial banks in the short category dramatically declines. So it's a rinse, wash, and repeat type of event. But the commercial banks ultimately are doing this to cover their shorts. As I said, they're still almost $9 billion in the red in terms of their short positions, where the price versus where the price is right now. But the penetrating of these moving averages in such a ferocious way triggers the managed money selling, which allows the banks to reposition, cover their shorts, and to go long. And I would say, if I had to guess, this will be a very, very short-lived correction. Look, you've never had more demand physically. There's never been more reason to buy precious metals. It is the canary in the gold mine. And I think they're very afraid, and they don't have many tools left but to do this. The bottom line is simply this: you can only manipulate a market for an extended period of time in the way that it is going, because the physical demand will create too much in the way of arbitrage, opportunities to accumulate physical when the prices are ridiculously cheap. And that is what's happening. And it will be a supply-demand battle at some point. And so I think, yes, it becomes aggravating. It becomes disheartening. I completely understand it. It certainly should be looked at much closer by the CFTC and the regulators, because on every single level, the physical demand from India to all the way over here and everything in between, all of these stories that you keep seeing, mine shutdowns, massive imports in India, and huge industrial demand, and big outflows coming out of COMEX, and demand in the retail sector off the chart, difficulty getting product, no one's selling anything. It's got them scared. And I think that they know that these losses will continue to get larger and larger and larger if they don't bomb the price, bust them through the moving averages, get the hedge funds to sell, cover their shorts, and reposition long. And the open interest has dramatically changed from just a few days ago. I expect this to be very, very short. Look at inflation. General Mills just came out and said they're raising their prices by 20% in January. Inflation is here, it's real. And with increased inflation, if you don't have increased interest rates at some point, the world just begins to lose faith in not only the bonds. I mean, look, the bottom line with the bond market is that you no longer have the market controlling the bond prices. It's just being controlled by a handful of bankers, and the price, you call it the most important security of the world. And some people still call it risk-free. I've talked about it being tier one asset. It's not determined by the free market. It's just determined by a handful of bankers and academics who have no idea what the hell they're doing. And they are creating such massive price distortions in everything from daily living, basic things that we need to live, to financial assets. And because of this, when interest rates correct, it will be a religious experience then again for a very, very large segment of the country. Buying precious metals has never been more important. And I think the commercial banks understand this, and they're trying to manipulate people's direction, or create a perception of reality that is counterintuitive to what's really happening. And they do that very convincingly, and they've been very good at it. But here again, when the physical demand is massively coming in at these subsidized prices globally, look at Russia. For the first time ever, Russia has more dollars in their reserves more gold in their reserves than they do dollars. They are de-dollarizing. Why are these countries like India massively accumulating so much metal? The World Silver Institute just came out and said over 1 billion ounces is going to be demanded in silver. One trader long 4 million ounces of gold on COMEX. The biggest money in the world does not care about price. They're continuing to accumulate it. And I think this is what has the commercial banks running scared. Maybe they're being told to do it, or maybe they're just trying to dig out of their huge short positions. It is not reflective of global demand on an industrial basis or on an investment basis, not even. You get to a point where you have to, at some point, something has to break. Either the dollar breaks or everything else breaks. Just depends which route that they choose. And my guess is they will choose to continue to destroy the dollar in favor of blowing up the economy and everyone's assets until something happens that forces their hand. And what is that event? Is it like we talked about, OPEC revaluing oil and other currencies? I don't know what it is, but I do know we are entering Alice in Wonderland level as it pertains to asset prices. And it's all courtesy of the environment that we have seen over the past 20 months. Here again, they're talking about between the Build Back Better and the infrastructure bill, another $4 trillion, where 2/3 of it goes to stupid woke issues and very little of it goes to building back the infrastructure. So, Dunnigan, I think if they were able to keep doing this forever, we'd see gold at $1,000 or under, we'd see silver at $8 or $10. It continues to ratchet higher, little by little by little, in a very frustrating and counterintuitive way, until one day we wake up and it's not. And it's just like when they asked Hemingway how he went broke, little by little, then all at once. And that is what will happen. It's 2 steps forward, 1 step back. Aggravate the hell out of me that it is counterintuitive and it collapses after I buy it, but it doesn't matter. It continues to march higher. The biggest money in the world continues to buy it, using price as a misdirection, as a tool of misdirection. If I didn't see the massive purchasing by the central banks, by the commercial banks, by the sovereign wealth funds, by the big money, then I would be less inclined to be so optimistic. But what just happened the other day was a almost like panic on the behalf of the commercial banks to drive the price below the moving averages, to get the managed money, who was really in record territory, to sell, so they could gobble up all of those sold long positions and issue the new short positions, taking the other side. So you have the commercial banks now positioned for a nice rise in the metal heading into the end of the year. And I think everyone's talking about some of that's going to happen at the end of the year. Maybe this is what it's about: repositioning, getting out of their short positions, forcing the managed money to sell so they can reposition in anticipation of much higher prices.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.